Happy Wednesday and welcome traders to this class, Trading Price Patterns. I am Rachel Deschelle, Senior Manager of Trading Services and your host for Trading Price Patterns. Now, I am joined in the chat today by my friend and colleague, Mike Fairborn. Please feel free to chat in your questions, comments, requests during the session today. I'll be sure to keep an eye on those. And please give us both a follow on X. He is Mike Fairborn CS. I am Rachel CS. We post a lot of market updates, charts, all the fun things. So a lot of those price patterns that you're going to see today, you'll probably see first on our X platforms there. Now, please give this video a thumbs up to help other traders find it as well. And please hit subscribe to our Trader Talk Schwab coaching channel. Now, you definitely want to stay around for this class today because we're going to go through our regular price patterns that we typically do, but we're also going to talk about how to trade failed price patterns or oops patterns as well. So, before we get started with our agenda, let's dive into some of those important disclosures here. So, options carry a high level of risk and are not suitable for all investors. The information that we're going to cover here is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we're going to place some trades using the Paper Money software application. Keep in mind that there are some differences between paper and live. Now, as far as our agenda, we're going to start this class the same way we always do. So we're going to go through our market overview. We're going to review old trades, maybe move a few stops around, discuss our price patterns, and place new example trades, talking through that trade management. So let's dive into Think or Swim, starting with that market update here. So we have seen a runaway market since the lows, but especially since we crossed that big famous round number of 7,000. So that is going to be one level of support here. We also have a near-term level of support with this gap fill right here, maybe this recent gap right around 70.50 or so. That's going to be our first level of support here, and then our long-term support becomes that old resistance, new support right around 7,000 here. Another chart that I thought I would bring up on the day, maybe a pretty important one. So we have seen that the Dow Jones Transportation Average has really taken a run to the highs much quicker than a lot of our other indexes as well. We do know that this index is price weighted, so there is one stock that is influencing this index quite a bit as of recent. We're seeing a possible bearish engulfing candlestick today. We call it a possible bearish engulfing for that possible bearish reversal, but we will have to see that follow through tomorrow. What will that follow through look like? Well, that follow through would have to be a close below the low of this high day. So bears would probably be looking for a close below this level right here around 22,970 on the Dow Jones Transportation Average. Now let's go through some of our old trades that we have placed. So these are kind of a few of our trades. We have a lot of long stock trades in CoreWeave, Fly, NVIDIA, Oracle. And we did have an Iron Condor on with Coinbase that is about to expire in the next 2 days or so. So let's look at closing that trade, taking our profits. We're at a 70% profit right now on that one. The price of the stock has stayed between our short strikes. So that would be kind of a good time, especially since we're a couple days out from expiration. We're at a majority of our profits on an Iron Condor. This would tell a trader, hey, maybe now is a good time to possibly close out of that position, secure those profits prior to expiration. And then we're going to move up some of our stops as well. So let's take a look first at Coinbase. You guys can see here the trade on the bottom of the screen. You can see here as well on the option chain, just kind of where we've been. We had our short strikes at 215 on the upside, 185 on the downside. We're going to right click, create a closing order on this one, and try to buy it back for about $1.09 here. So I'm going to hit confirm and send, and So it looks like we are flattened out of that position there, or just a fancy way of saying we are closed out of that position there. Let's take a look at a couple others that we have on our list. So today we did get stopped out in Frontline. So we traded a possible inverse head and shoulders pattern that kind of looked a little range bound after it broke out, and we got stopped out today. Let's take a look at Firefly Aerospace. We traded this double bottom pattern. We had our stop in at the midpoint of this candle here. Today would be a great opportunity to possibly move up our stop since the price of the stock has moved up as well. So creating, maybe protecting a little bit of our profits there. So we're going to place it right at where the breakout point is for Firefly. Okay, so right around 35.64, 35.70 or so. So we moved that up. Now let's take a look at another one here as well. CoreWeave. Okay, so CoreWeave, we first traded this falling wedge, remember, a couple weeks ago. We were quickly able to take our profits, meeting some of our price targets. Then we said, hey, well, we're seeing another pattern forming now. So we saw this double bottom forming, and so we took a trade with a 3% confirmation with an entry right around 117.60. We had our stop down here near the breakout candle. And now we have, if I zoom a little bit closer, we had a little bit of consolidation around this area, a little bit of a support retest with this candle from Monday, actually, where price actually re-entered the pattern for a little bit. And this is kind of one of those reasons why traders may be really careful not to have super tight stops on with these price patterns, because sometimes price does come back, retest that level, maybe have an intraday swoop for about a percentage point or two, and then may bounce back up to the upside. And that's kind of what we're seeing here. So this gives us a chance to move up our stop. Let's move that up to the breakout point here. And let's see if that lets us move it. We may have to edit this one. So we're going to cancel, replace this order. This may be a time condition, that's why. Yep, we're going to just uncheck that time condition there, confirm and send, and then we'll move up our stop from here. Okay. Oops, it's still not letting us do it. Let's just move it up manually. We'll go to 113.70. So we're going to do that one more time. 113.70. We'll double check to make sure that time condition isn't in there. Okay, it's still taking that time condition, so that is why. So we're just gonna hit save and hit confirm and send. Doesn't look like we have that time condition in there. We're gonna hit send again. Maybe this could be an issue with paper money, but you guys get the idea. I'll figure that out later to not take too much of your time here. So the idea is we are moving the stop up to right around that 113, 114, which was old resistance, now new support. That price already kind of flushed out that level and has bounced from. So you get the idea. Now we're going to move to NVIDIA. We saw a range breakout here, kind of same thing. We did a measured move from the range. Our entry was right around 198.46. This could be a chance to move up our stop as well as on this one. Put it to about the top of the range there, right around this level, around 195 or so. So we're moving that one up as well. And then I see a question in the chat. If we reach the target and see that the trend is still going on, would you roll? So I assume you're talking about maybe an option position there. So it depends on the type of trader that you are. So typically, if you are a target trader, like in this case, we are projecting price targets, we are target traders. So we're setting this price and saying, hey, no matter what, we're going to take profit here. We're going to close out that position at that profit level. Now, if you are a trend trader, you may say, hey, I may want a little bit more time on this option possibly because the trend is still moving to the upside. So you may have an adaptive stop on the downside. So sure, yes, you would say, hey, if I'm a trend trader, I'm not a target trader, I may continue to trade this trend. If it is blowing past resistance to the upside, I may say, hey, I want to roll this option for possibly more time. So hopefully that answers your question there, Abby. Now let's see if we have any others. We have Oracle here. So another double bottom pattern that we traded last week. We did see a little bit of a consolidation around our entry here. We have that move to the upside. Let's just move up our stop just a little bit to the top of where that pattern was, right around 172 or so. So we're just going to move that one up as well. Okay, wow, that was a lot of trades we had to adjust there. I do have some new trades for you guys today. We do have a lot more double bottom patterns. And I want to just kind of cover this as well because sometimes you see a ton of different patterns showing up. Maybe they're similar patterns, maybe they're the same pattern over and over, maybe they're the same pattern that's actually showing up in one particular sector. I will say the abundance of these patterns, the frequency of these patterns, that is going to be very telling for you about the current market environment. If you guys remember a few months back, we traded a lot of head and shoulders type patterns, maybe a lot of double top patterns, kind of a more topping reversal, bearish reversal patterns like that. Then for a couple months, it was a little bit choppy. It was a little bit tougher to find patterns. We had a lot of choppiness in the overall market. There wasn't a very clear trend. Maybe there was in some groups and some more kind of choppy sideways action in others where we saw more range type patterns. Now we're kind of changing to the market environment where we are seeing more bottom reversals, more bullish reversal type patterns. So keep that in mind as you are scouring the market for these patterns, as you are scouring your watch list, keep in mind that that is going to be a characteristic of the market environment we're in. So if you're seeing a lot of top reversals or bearish reversal patterns, topping formations, distribution patterns, all kind of the same way to say the same thing. That is going to be telling you about a market that is looking a little bit toppy. If you're seeing a lot of range-bound price action, that's telling you the market is moving a little bit more in a sideways pattern. And right now, where we had that aggressive push off the lows in the overall market. We're seeing a lot of repair in more of those cyclical sectors that we want to see participate in a bull market, like technology, discretionary. It makes sense to see some of these bullish reversal or bottoming type or accumulation patterns that we're kind of spotting here. So I want you guys to keep that in mind as it relates to price patterns. Okay. Awesome. I'm looking at the chat. Okay, we have a couple requests there. Maybe we'll hit those at the end because I do have some good ones for you here. And today I do want to make sure that I do show you how to trade failed patterns because we've talked about failed patterns quite a bit in this class, and I think it's something that we need to hit on a little bit more as well. So let's talk about more of those bottom reversals. Let's place a couple example trades, then we'll look at how to trade some failed patterns here. So we're seeing a few more setups in the technology space. Keep in mind when you are looking for bullish reversal patterns, it has to have something to reverse from. So if you're seeing maybe more of this kind of range bound price action in the middle of a trend or something like that, It's likely more of a consolidation, more of possibly even a continuation pattern. But when you see patterns like this, a clear double bottom pattern where you see two levels being touched to the downside on support, you see that rally to resistance at kind of the same level, and you see that the prevailing trend leading into the pattern is a downtrend. It's called a reversal pattern because it has to have something to reverse from. So we had the downtrend, the little bit of consolidation that typically happens at the basing, at the bottom of the market here, and then we typically have a breakout to the upside on these. Now, we've talked about how there is an importance for waiting for confirmation. In this class, we use that 2% rule quite a bit. We say that, hey, if we find that resistance level on a price pattern, or we identify a support level on a price pattern, we want to wait for a 2% break outside of that level to give us enough confirmation, to give us enough conviction to be able to take that trade in the desired direction that we think it's going to go. Now, when price hasn't hit that level yet, it makes a little bit more sense for a stock trader to possibly take a buy stop order, especially if the price of the stock is below that level, because we want to say, hey, we want to wait till it gets to 137.08, for example, for us to possibly take that trade to the upside. Now, an options trader may say, hey, we don't know what the price of the option is going to be. When the price of the stock gets to that level, that gives me that trigger point. So we may say, hey, we want to set an alert at that price level to have that strategy ready to go to place that trade when the price of the stock hits that level. Or we may say, a trader may say, well, we may want to use a conditional order on this one to say, hey, whatever the price of the option is at that time, send that order. So a couple different ways that we're going to approach this in this class today. We've talked about double bottoms quite a bit, especially last week because we saw a lot of them there. But again, it is the characteristic of what we are seeing in the overall market. So what we're going to do is we're going to take the entire depth of the pattern because we know that the market loves symmetry in price as well as time. And we're going to use that as our guide for setting our profit taking orders or our targets to the upside on this possible bullish reversal. So we're going to take that entire depth, which is roughly $35. We're going to add that to the breakout point, assuming that breakout point is going to be that resistance right around 134 or so. That would place a profit at possibly, or a measured move, possibly around 170 or so. Now, keep in mind, patterns are not guarantees. You may actually run into a little bit of resistance, maybe on the way up at some of these levels where you have those former highs. So keep in mind, a trader may say, hey, I want to maybe take a profit for half of the position here, maybe a little bit more in the position there, kind of taking profits on the ride up. So there is no guarantee that the price will go there, but that is the measured guideline that we do use for these price patterns. Now, it did take, if we just kind of take the start of this right around February 10th, it took about, let's say, about 6 weeks to form. Or I guess, no, 2.5 weeks, or 2.5 months, I should say. So it was the beginning, middle of February that this pattern really started to form. Now we're kind of getting to the end of April. So we may say, hey, it may take about 2.5 months for the price of this stock to reach that level. So keep that in mind. Um, Now I see Mike is answering a couple questions in that. Now Beth has a good question. Not seeing a scan for bullish reversal patterns on Thinkorswim. Unless I am missing it, it would be nice to have. So, a couple things that you guys can do as traders when you are scanning for possible bottoms in the stock, because you have to find a bottom first, right? You have to find a stock that is hitting lows. So, a couple scan examples that you could do. We talked about this a little bit last week when we talked about momentum divergences. One of the things we talked about was the RSI reaching oversold levels, because typically in a strong downtrend, you're going to have the RSI reaching oversold levels below 30. So maybe that's one of the characteristics that you look for in a strong downtrend, and just spot a bottom first. Then there's other things that you could look for, like maybe you could look for possible bullish reversal candlestick patterns. So maybe a bullish engulfing candlestick pattern, which is something you can scan for. Make sure you're using the live environment, because these study filters and things like that won't work in the paper money environment. But another thing that you could look for is stocks making 52-week lows, so new yearly lows, or even stocks within a certain percentage of those lows as well. So these are all things that you can kind of tend to look for when you look for a possible bottoming process taking place. But we have to remember there is not a lot of V bottoms. I know that there was just recently, but a lot of times it takes time for a stock to undergo this type of repair, go through that accumulation phase. So you may be watching these stocks for a little bit as far as just looking for that bottoming process, but those are a couple ideas that could give you stocks that are reaching those lows, maybe testing that support there. So hopefully that helps. Now, with this one, let's place a trade on this one. We have earnings coming up here in a couple weeks, so we do want to be mindful of that. Now, another thing that we want to keep in mind, I put IV percentile on this watch list of stocks that we're going to look at today. And one thing you'll notice about Datadog, which is a stock that we're actually analyzing here, we can see that there is a very high implied volatility percentile here. So, which is essentially means on a scale of 1 to 100, we're at a very high level of implied volatility for Datadog. So, if you are an options trader, the first thing that you should be thinking of when you're thinking of placing a price pattern breakout trade is, hey, what is the volatility regime? Are we in a very high volatility regime or relatively low volatility regime? And this volatility regime right now is pretty high, which may be telling us a couple different things. It may be that we'd be taking on additional risk if we are selling an option. Now, the premiums do favor in the higher implied volatility environment, they do favor option selling, just because as an option seller, you're looking to sell at that highest price. So inflated premiums work in your favor. But when implied volatility gets to a certain point of being a little too high, it can be a little bit more risky to possibly be selling options at that level. So a trader may say, hey, we may want to wait for a breakout to the upside, maybe sell a spread underneath resistance here. But again, you would have to wait for that break, a little bit of confirmation there. Another way that you could do it within the price pattern, maybe looking for a gap level as a way of possibly selling that option there. Now, the high implied volatility environment, it won't necessarily be favoring an option buyer. With this one, we're going to use the example of just this stock trade in this case. So we're going to look here, we're going to go to buy custom. We're going to use our $10,000 OCO bracket here. So keep in mind, remember, we only have about $10,000 that we're putting into our trade. We're staying within the 5% risk of the account. And let's look at a few different levels here. So we've already talked about a few, and we talked about using a buy stop on the entry. It's going to basically say, wait until we get that confirmation, whatever that confirmation looks like to you, whether it's a couple closes above that level, maybe it's a percentage, like that 2% move that we use in this class. And then we have, as soon as the price hits that price, it's going to become a market order. Keep in mind with stop orders, there is no guarantee that price is going to be filled anywhere near that stop price, because what do stocks do in the extended hours? Sometimes they move, and that stock could gap up or gap down. So keep in mind, it could be by the time the market opens, it could be not too close to your price. We have that limit to the upside of that 169.83. To the downside, a level that we may be looking at is a gap fill here, right around 121.18. So that's going to be the level that we're looking to the downside. 121.18. That still gives a favorable risk to reward. If you calculate the risk that you're taking, which is your entry minus your stop price, compared to the reward, which is your profit target minus your entry. So for a trader, many would say that is still a favorable risk to reward. And then obviously, depending on what the stock does, you can move your stop up accordingly if the price of the stock does move up to the upside. Okay. Let's see here. Let's go to our price patterns class, and we are going to send that order there. Always important to do that read back there, you guys. Okay. Now we're going to talk about, we're going to kind of do one, and we're going to kind of layer these in. So the next one we're going to talk about is possible failed patterns, because I want to hit this one heavy, because we always talk about how failed moves typically turn into fast moves in the opposite direction. Now, I did not quote that one. That is from another technician here, but it will give us as pattern traders an opportunity to still participate in that move, because one of the most important things to do as a trader is to know when you're wrong, which in this class, we use stop orders. Our stop orders tell us when we're wrong. So that is what a trader uses to say, hey, if I get my stop triggered, that's telling me exactly where I'm wrong in that trade. And what do you do as a trader? You have to be adaptable to the changing market environment, whether that's the current market or in an individual stock that you're trading. You have to be open-minded. If you are wrong, you got to know where you're wrong, cut your losses, and possibly set up for a new possible trade. Maybe some folks want to take a little bit of a break, a little bit of digestion, and say, hey, okay, this is what I did wrong. Maybe trade journal it. But some traders may want to say, okay, if I was wrong in this way, we did have a breakdown that I didn't necessarily expect. Is the trend breaking another way that I should possibly participate in the opposite direction? So this is what some of these patterns and looking for these types of failed moves can possibly help you as a trader to still have an edge here. So there's a couple different ones I want to look at. So Southern Copper being one of those examples. So if you guys want to put in the chat the type of price pattern that we're possibly seeing play out here in Southern Copper, I know I see a bearish, possible bearish, a reversal pattern here on this one. And I can make a couple highlights here. So we have one top here, one top here. Keep in mind those tops, they look very different, but they're only about a percentage point away from each other. And then we had this neckline of support right here, really crafting out this possible double top pattern. And a trader may say, okay, well, taking the width of that pattern, this may give us a move possibly all the way down to 87.58. And a trader may say, if we kind of take a measured move from here, price has only moved about 1.3% so far. Okay, a 2% move out of this price pattern would actually put us with taking a short position or buying a put, whatever it may be, but a bearish position, an entry right around 91.26. So keep in mind, this is a bearish reversal type pattern, but a trader may look at this, especially with the price action today and the fact that it has not reached that confirmed move yet for what we use for this class. They may say, okay, well, what if this price pattern fails? What if price actually reverses back up and re-enters into the pattern? So a couple of things we want to take a look at here on this. So we have a clear-cut line of support right at those former lows right there at 93.16. And if we just look at the price action today and yesterday, we can see that price broke down with this big red candle. But then we see price today is actually forming an inside bar. And an inside bar is telling us that, hey, this may be a little bit of a pause in the trend, or it could possibly be a reversal. So an inside bar is similar to a harami in a sense. Now, a harami is going to say, okay, we're taking this entire body of the candle, of this candle today, and it's enclosed in the prior day's body. And if this was a bullish harami, this candle today would be green. However, it's red. So we can't call it a possible bullish harami, but we still can call it an inside bar. And an inside bar typically tells us the same thing that a bullish harami does, is it's telling us that this entire, so I guess the interpretation is the same or similar, but the pattern is a little bit different. So this entire range today is going to be enclosed in the entire range of yesterday, and that is what an inside bar is. And so confirmation of an inside bar would be a move or a close above the high of this low day. Okay? So we're going to have to see a strong move or a close above 93.73 for us to say, hey, this was a valid inside bar. And if it is a valid inside bar, that would mean that price would have to re-enter back into the pattern right above that area of old support, now new resistance. So a trader may take one of two trades here. If a trader did have conviction, whatever their confirmation is to the downside, they may say, hey, we want to take a short position, possibly with that 2% move when price moves below $91. Where could we possibly put our stop? Well, we could possibly put our stop at 93.73 to buy it back if it closes above that level. And where could the profit target be to the downside if we are looking to short would be 87.58. But another trader may say, hey, we do want to wait a little bit more. We're going to actually possibly take a bullish position if the price does re-enter back into the pattern. And we do know that if there is failed moves, which a lot of times we see this level get flushed out, we see a reversal pattern taking shape, and if we do see a move back into the pattern, that could tell us that we could have a move, a very fast move up here at that former resistance right around $99 or so. And that would actually give a more favorable reward to risk in this scenario. So let's actually place a trade based off of that scenario to say, hey, if this pattern fails, we want to make sure that we participate in that possible quick swing to the upside, because a lot of the times those failed moves turn into very fast moves in that way. So what we're going to do is I'm going to remove some of these drawings here to make it a little bit more clear for you guys. I'm going to remove some of these drawings, and we're going to say, okay, if we do have a hold or a close above the high of the low day, or that confirmation of that reversal of that inside bar, that would be a move above 93.73. So that's going to be our buy stop order in this case, or entry order. Now, again, if you're using options, keep in mind there is a relatively high implied volatility. You do have earnings coming up within the next week or so. So keep that in the back of your mind here. So that would be our entry in this case. Our target would possibly be right around these levels, right around $99. So the top of the consolidation or the highs in that case. And where could our stop be to the downside? Well, at the low of this candle. So we're using that as essentially we're using that breakdown candle or that first candle of the inside bar, that reversal, possible reversal candle. We're using that to manage our risk. So we're saying, hey, if it closes above that, that's going to give us a strong reversal signal to the upside right around 93.73. But if it breaks, we want to get out to the downside right around 91.91. So let's go ahead and place that order right now using our same rules for risk management in this class. So we're going to use our buy stop to say wait until it hits 93.73. We're going to target 99 to the upside, and our stop to the downside is 91.91. Okay, we're going to make that good till canceled, and we're going to hit confirm and send here, send it to our price patterns class. Okay, let's see. Okay. I don't see any questions on that one. Someone mentioned notes on the trade are good to have. Yes, it is very good to make notes on your trade. If you guys actually wanted to do that, I'm going to show you exactly how to do that. So we placed this one already. You can do that on the confirmation screen. We placed this one already in the working orders. So if you did want to make a note on this trade, you could right click on the order there and you could click view think log notes on order and you could type in notes there. So I'm going to type in failed moves, possible fast move. And we're going to hit save and we're going to go to our tools and we're going to go to think log. And this is where that is going to show up. So you can see that you can just go straight to the tools think log, or you can place these notes on your trade. Treat it like a little bit of a trade journal here. So it'll tell you when you were wrong. You can make notes on the trades that you did if you were wrong. So that way you have them to look back on. And you could always search by a certain symbol, whatever it may be here on this page. So this is actually a really nice tool to use. I'm glad that you guys brought that up. Um, okay, and then I have another question. Why not make the buy a stop limit in case of a big gap up? I am so glad that you asked this question, Ted. Now, the thing with a stop versus a stop limit is the stop order says, hey, when it hits this price, send a market order. So if the stop gaps up overnight, that order is going to get activated immediately, and we're going to send a market order on the open. Now, keep in mind, if you say we want to use a stop limit order, and let's say you put your limit a little bit above the stop to kind of catch it, and let's say the stop or the price of the stock opens well above that, there is a chance that you may not even get filled on that limit because the price of the stock essentially may blow past that limit order in that case. So keep that in mind. That is always a risk with stop limits. Same to the downside in that case. It may blow past that limit. So you have to decide whether you want control of the price or the speed of execution. Now, a couple other ones here. Let's talk about Merck because this is another example that we can use. So we're kind of seeing a similar thing with this possible double top. We have the tops here. We have our support right here. We are forming not only, so it's not an inside bar in this sense, but we're forming a little bit of a doji candle in this case. So we have a doji candle that could be telling us, hey, there is a possibility that this stock may have a little bit of a pause here at this level of support, even though we had a little bit of a breakdown of it. Or it could tell us, especially since this is a powerful type of price pattern and it's occurring right at a level, or I guess a candlestick pattern, and it's occurring right at a crucial level of support, this could be telling us that it is a possible reversal. So if we did say, hey, if this is a failed move, and possibly thinking it could turn into a fast move in the opposite direction. Well, where could some of our levels be? We have a level up here of resistance right around 124. We may want to say, hey, we may want to wait till price closes above this level of 116.53, and then we may put our stop to the downside of 111 here in this case. So that low of that prior candle. So similar to what we did before, using that first big breakdown candle as a way to manage our risk, saying wait until price gets above 116. This is assuming it does fail and move to the upside, which again is no guarantee. Using our stop to the downside, placing our profit order to the upside. So let's go through that one as well real quick here. We're going to use the same thing we did before. Keep in mind the risks with those stops. We're going to say 116.53. Our profit order to the upside is 124, and our stop to the downside is 111.91. We're going to make those all good until canceled. Okay. Whoops, and I actually used this on the wrong one. So we're going to use this as a dollar amount for $10,000. This is why we check our orders, and we're going to sell 100% of that position. Okay, that looks good to me. Okay, so we're going to hit confirm and send price patterns right there. Okay, let's check though a couple of those questions here. So Morning Rush said, will gap up? We should be able to put a condition on the order so we are staying on the target right. Um, Maybe if you can clarify that question a little bit for me in this case, I'll kind of explain it again. So essentially what we're saying is if price does reverse here, enters back into this pattern here, we want to wait till we have a close above this level. If you don't want to give yourself maybe that much confirmation, you could back this stop down a little bit and use the midpoint of that candle. So that's another way if you want to increase your reward to risk ratio in that way. So that's another way to go about it. But essentially, we're saying wait until it hits 116.53, send a market order, placing our profit target to the upside of this possible range, because essentially what we're saying is if this fails, this is no longer a double top pattern. It's no longer a double top. We call it a possible double top until we have that confirmation of the downside break. But if this actually just fails and moves back to the upside, what does this pattern actually become? Well, it actually becomes a rectangle pattern or a box pattern or a range. And so where can we find price actually finding its way to the upside? Well, possibly the top of that range is going to be that level of resistance. So that's going to be where we're going to tend to look for. Let's see. Mickey had another question. Could you not use the 116.53 as resistance and go short from here? You could use, so as far as going short from here, if this doesn't end up being a failed pattern, you want to wait for confirmation of the downside. We talked about that 2% rule that we possibly use. So that may lead us down here or so, taking a short position down here around 110 or so. Or maybe a couple closes beyond that level. That would be where you could possibly take a short position and maybe putting the buy stop to the upside if it re-enters that pattern there. So really good questions here, you guys. I'll show you a couple quick ones here. I know we have like 1 minute left. You guys can see these stocks on the left-hand side. We went through Datadog. We have a couple other possible patterns really stacking up. We have a double bottom in Take-Two, TTWO. I marked that as a possible 2% move. CrowdStrike, similar thing that we're seeing here. We did get past that 2% move today on that one. Shopify, similar setup. We are looking like we have another possible double bottom pattern. So you're going to use those same rules to project those price targets, to place those stops, the same as last time. And then we went through Southern Copper. We went through Merck as talking about how to trade a possible failed breakdown. Similar thing with Duke as well. So we are seeing a possible double top in Duke. Of course, if you're going to take a short position, you want to wait for that confirmation there. And of course, looking for that possible reversal in that case. So you guys, we still covered a ton of price patterns. We showed you today how to wait for confirmation, how to possibly trade a possible failed pattern, because that obviously changes the context of the price patterns. It becomes less of a reversal pattern. It becomes a continuation pattern in that case. So we talked about a couple different examples here. This video will be archived in a couple hours. If you guys have to watch it back, I definitely encourage you to do so. Please just give this video a thumbs up. Please follow both Mike and I on X. He is Mike Fairborn CS. I am Rachel Dash CS. And then please subscribe to our Trader Talks on Schwab Coaching. Thank you, everyone, and I'll see you later, traders.